What's happening, guys? I hope everybody had a fantastic weekend. We've got another Sunday, a video coming at you. Again, this one's going to be relatively short. A lot of the same stuff's working, and I don't want to, continually repeat myself each and every single Sunday when, you can go back to the prior weeks and use that same information. It's been very timely, as far as preparing for things. For example, on Friday, AUVI, longs retail is still falling for the naked short PRs, which I love. I love that. 60, 70, 80 million shares on a PR that they hired people to look into the potential of naked shorts. That's awesome. And GNS is still doing that. Other CEOs will take advantage of that. So we talked about HLBZ, probably the sleaziest CEO out of all of them because he's literally raising money into it and pretending that he's, that that's not the goal, right? Blaming the naked short, but then filing things to sell cape. And you have to remember that all these companies are public for one reason, to sell you paper, to sell you the dream. And some take more advantage than others. And HLBZ is obviously an example. It's down to 20 cents after hours, right? On the file. So there's going to be a lot that do that. There's been a few, I forget what it was last week, but they literally put out a PR in the morning that they are investigating naked short and literally filed an offering and raised money after hours. And I want you guys to see this. I want you guys to know this because, like I said, when I started back in 2003, this was a thing too. And, I remember I was probably, part of the naked short wars. Like, we got to get the naked shorts. We're going to squeeze them. And it forces you to hold. It forces you to kind of believe in the story because it's an us versus them, right? It's the same thing as the apes. You feel like you're part of something, so you hold it. So as a trader in this momentum, one, you know that there's a good potential momentum trade, but also two, as a short seller, you need to kind of have hands off and be patient and let this trend build before there's an edge. So you saw the same thing happen on AUVI as SNOA, and I think it was MGLO or MLGO, whatever that was. But basically, they walk it up, and you don't know, is this pulling back shorts or is it sellers? And if it's not sellers, then you see the swipe back up, consolidate, and start to head higher. We went over that VWAP trap. Ramps up, comes back under VWAP. They start to bait under that VWAP level, and then straight up from there. The edge is when there's an exchange. That was one of the questions that I got for this video is, can you kind of discuss what you mean by an exchange? And, whether it's a clear out, an exchange, all these different terms that you can use. And so the easiest way to kind of think about that is think about if you were short, if you're fighting a trade and you're trying to cover, right? It's almost back to your average and it misses. So you're like, all right, instead of 130, I'm going to go 135. And so it's at 140, comes back, and it's like 136, maybe comes down to 135, and then goes back up over 140. And you're like, all right, 130 is not happening, or 135 is not happening. I'm going to go 140. So now it wraps up 150s, comes back to 145s, doesn't happen. At some point, you have to stop being patient and trying to get the fills on the bid, right? And so you're not the only one that's doing that. So what an exchange is that moment in time when everyone just decides, hey, I'm not getting filled on the bid. I have to take the offer. And at some point, it's going to hit ahead. And it's when that moment comes where there's a ton of volume, everybody decides if they're going to take the offer. At the same time, you have a huge influx of volume, but the offer does not budge. You see a bunch of shares go off. You see a bunch of size go off. But the offers do not move. And even if they did ramp up a little bit, they sit right back to that level where all the volume went off. That's a stop move. That's an exchange. That's the clear out. It's over a key level where everybody is fearful that it's going to break through this level. And all of that fear creates this massive liquidity event, this massive liquidity potential at that key level. And they know that. So a lot of times you'll see a ton of volume go off because they're camped out right there, knowing that your trigger point is about to hit, knowing that you're fearful that it's going to go to the moon. And as that happens, that's the exchange. And in this market, you have to be cautious because sometimes there's that huge exchange, gives you confidence, that's it, pulls back, but it still holds over that prior trend. So AUVI was an example of that, as you saw with 150 line. 150 line was the level that we were using all day. We needed to see some sort of exchange happen as it blew out. And that happened at the 180s, as you saw. I posted that when I entered the trade for the fade back down. We saw that on SNOA, where it walked down all day, comes back, consolidates over VWAP, and then a slow and steady grind. The slow and steady grinds are the ones that are going to take your money. You just have to move on, and you don't have to wait for it, because you're going to get nervous. You're going to cover into that exhaustion move, which is exactly when your edge returns. And I want to see that exchange happen, and then I want to get into the trade. So again, quite simply, it's that moment from you're bidding for it to the point where you take the offer. And when that happens and everybody does the same thing at the same time, the same nerves, the same trigger points, the same levels, so that big exchange sits back, consolidates, fades up, right? That's what I want to participate in. If it sits back, consolidates, and holds on, I don't want to size that trade. I don't want to get overconfident in that trade. So be aware of that, be patient, and let's see what the week brings. LCID, raising warning shots for anybody that was reckless. This is Clove type stuff. This is AMC type stuff. This is stuff that this type of a move gave me, some serious stress, PTSD, nightmares, this close calls or big losses, and you really have to be honest with yourself in this situation. Were you saved when it came back from 18 to 15? Did it save you? What if it went to 22? Would you still have an account? And you have to really be honest about that, because if you would have blown your account at 22 or 25, that was only one more halt away, right? One or two more halts. And if that happened, would you have had a career in trading left? If the answer is no, then take this moment and make adjustments. And you saw me in IU go into a broken record. Do not try to find the top. Do not try to scale into this trade. Do not try to fight it. Do not leave it. Just leave it. You will not miss it. I promise. I use the word, I promise you will not miss it if you just wait. Wait for it to slam one. Comes back, fails to follow through, clean trade back to the 11th, right? By not trying to find the top and adding and blowing out, you missed an opportunity for $2 a share, but there was still another 5, right? It actually went up to 16 and then faded off after the complete blowout happened. And that's it. Stocks can remain irrational longer than you can stay solid. And you have to remember that. So if you got let out, don't let it happen again. That was my story with AMC and Clove and all these different names in 2020. And as we've been talking about, we were 20, 25, 30, 35% of the way to a 2020 type market. And LCID is exactly what we saw. So you have to have you got to be cautious. You got to be aware in this market that, you're only one of those trades away from, being gone. So make sure you got your max stop if you have difficulty with those. And don't worry about the front side of trade. There's so much on the back side that you don't need to find the top. And last but not least, same thing with GNS and, BZFD, for example. I compared BZFD to GNS last week. And, that everybody's going to be wanting to try to figure out. Everybody's going to be wanting to try it. And I guarantee everybody come Monday is going to want to focus on that name and figure it out. There's going to be a great trade for it. But there's a lot more traders that are probably bent short that need it to fade. So your edge is here to here. If you wait for this and it starts to go the other way, you're going to be competing with everybody else that did the same thing. So with these opportunities, with this type of market, for me, I like to take the high probability trade and move on. I don't need to let this thing work. I don't need to be a hero and try to get the big picture move. There's plenty of range in that first part of the move. and then move on. And you saw the same thing with the 335 level on BZFD if you're in the room last week, where those cover levels to take the trade from the 370 exhausted. And if he didn't have a trade because everybody was waiting for the same thing. So remember, these high volume trades, GNS, BZFD, all these types of things, everybody is waiting for the same thing. It's crowded. So your edge is to be able to take that quick, big picture opportunity, but don't try to force it. Don't try to force something more, especially when this market is not. So anyway, I think that's it. But again, be cautious. I think we still have maybe a week or two of people falling for the naked short PRs like we were talking about. As you saw, HLBZO, geez, I need some sleep. HLBZ CEO is taking advantage of the naked short thesis, as you can see by the fire. So, and now you have GNS CEO trying to catch the AI theme. So the reason why BZFT went nuts is because of the ChatGPT or GTP, whatever it is, which is obviously a hot theme, right? The artificial intelligence. So over the weekend, he tried to attach himself to that theme as well. So he's getting the best of, both worlds. So just be aware of, that's a pure example of greed and the CEO trying to, blow smoke. And you need to be cautious of that. It's fine. You can make money on the long side. You can make money on the short side. But if you believe it, you will lose. I promise you that. You will lose in the long run if you actually believe that this stuff is real. So anyway, let's get into the action for the week ahead. All right, guys. The second part of Scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're looking for somebody to tell you what to buy or sell, you're in the wrong spot. I'm sure somebody will somewhere. However, my goal here is to show you what makes a good setup, what gives proper edge, and how I am preparing and planning out for the week ahead, and what would make me take a particular trade. All right. So first and foremost, I think it's pretty clear that BZFD is going to be a nutty trade. And I think the biggest thing about BZFD is the comparison to GNS. Same kind of thought process. There's going to be a big trade. However, if you sit there and try to force your thesis to play out, I do believe that you're going to get chopped. GNS gave great opportunity. However, if you did not respect it when it came into the prior levels of support, you ended up waiting all day, having a nice trade, and then getting blown out for either flat or a loss later on. So again, my goal is to be able to take advantage of that move and then move on. I think that having that micro view and trying to force something to happen on your timetable is going to end up resulting in a chop. It's similar to the PEGY, P-E-G-Y example that I gave for GNS. BZFD is no different. If it has a weak open and it's trapping up the open, I believe that we probably have a nice rally back. If we gap up over 4, blow out to 420s again, maybe even 450s, I think we'll have a nice spade. So it's purely reactive, and we just need to kind of wait for more information come Monday. And again, if the trade is, and I'm again not saying trading is easy, but if the trade is easy, and what I mean by that is if you take the trade, there's no headaches, and it works perfectly, to me, I'm locking it, because that means everybody just did the same thing. As soon as it starts to collect, it's going to come all the way back and go the opposite way. So again, gap up, parabolic, looking for failed follow through after an exhaustion move, an exchange, just like we talked about in the first part, or weak open, trap, versus those 335 levels that I gave in the room on Friday. Next up, Lucid. Ideally, we have some sort of gap up. I'd love to see, 13, 14 blow off, sit back towards the 11s. I think a lot of people are going to start to maybe accumulate, thinking that it's going to, go nuts again. But I think a lot of the EV sector is going to depend on Tesla and what's going on there. And that, to me, that was a huge surprise. I wasn't really paying attention At 100, I'm thinking like 80's coming. And then literally that was it, like 101, 102. And then it, literally bounced 80% straight up. That gives a lot of juice across, LCID, RIVN, FSR, NKLF. So understanding and knowing what other things you could trade using LCID or using Tesla as sort of that index is going to really benefit you. For example, LCID on Friday, I told the room, forget LCID. If you're new, if you're unsure, if you're fearful of these circuit halts, there's a lot of emotion in LCID. However, you could trade RIVN, right? So when LCID circuit halt at 1780s and it started to quote at 15s, to me, that was an opportunity to fade RIVN. So I focused on RIVN and FSR and NKLA. And as it opened and it was lower and it stayed heavy, RIVN came in, a buck 50 per share was a great opportunity with much less risk, especially when Lucid's jumping around a buck or two. So I was able to scale in and size up on RIVN without that $1, $2, $3, risk of which way are we going? Flip a coin, who knows, right? So anyway, think about what else you could trade instead of that main name. After that, Rivian, obviously same thing with Lucid Technology. Next up is Mara. Mara has been fantastic. I like to trade Mara and ride it. So if I see Bitcoin going sideways or down, I'm looking to fade Mara or ride it. What I do is usually start into both. One will have relative weakness typically. One might have relative strength. A lot of times they flip-flop. I want to focus on the one that is proving me correct. A lot of people scale into a trade that's, higher, that's stronger, that's going because they think that when the trade comes in, they're going to make more because there's more for it to, fade. There's more range. But it's kind of opposite thinking. You want to focus on the one that's weaker because when the other one does come in, the weaker one's going to come in even faster. So that is something that, I used to do too. You think the biggest gainer of the day is going to give you the best opportunity. What if it just grinds all day, right? So keep that in mind when you're trading, names like this. Other than that, COSM, I'm doing this a little bit different today because I didn't bring my other computer. I'm not going to do the screen time. I'll put the charts up there, but that's about it. COSM has been a great trade. I think that, over 720s is sort of an exhausted level and under 680s, they're kind of soaking. So we're just kind of in that holding pattern until people forget. As soon as they give up, as soon as the crowd moves on, we'll probably have a nice fade up. But for now, be cautious getting too aggressive. But there's been opportunity and there's been basically a channel 680 to 720. And so I participated in that on Friday and I covered most of it, like 677, 676 range. I was expecting more. I was hopeful for more, but it didn't stay heavy at that level. It absorbed. Next up was AUVI. AUVI was what I was talking about earlier. People are still falling for those naked short PR. So if GNS were to go crazy, if there was another naked short PR that came out, that index may stay relatively strong. However, if it doesn't, and this thing opens up and it fails, there's a good chance that it's going to go right back to where it came from because the entire thesis is BS. It's just a way that the CEOs are using to boost their stock price and volume liquidity so they can raise money. So again, I think last week I talked about it, but I figured we'd have probably 1 or 2 weeks of retail falling for these PRs. So we'll probably get to the tail end of that this week, but I'm hopeful for more because it gives opportunity and it gives really some nice layup shorts. Just be aware if there's outlier volume and if something should have baited and it doesn't. And we went over that, the VWAP trap, AUVI, SNOA, those were all perfect examples. Another couple, FOXO, great opportunity on that. On Friday, I had a great entry 140s, scaled into the trade 130s, and I was in the 90s for a cover. I had just missed, and ended up kind of rallying back. Unfortunately, I turned a really good trade into, pretty much a flat trade. So I started to size down at pretty much my average. And then as soon as it confirmed that it was going to stay heavy, I started to scale back into the trade. It ended up working out really, really well. However, I was disappointed with my trade on it. I posted it, but, it faded off nicely, but then there was that risk and it came right back to that average. So unfortunately, I had to, size out and then size back in. But I'd rather be safe than, sorry in the event that it goes into a circuit or does something silly. So morning shove, 105, 110s would be ideal. And then looking for failed fall through. QNCX after that. That was another morning gapper that just fades off all day. Just got to be a little bit cautious. If this thing hangs around, just like SNOA, could turn into a liquidity trap. For now, I'm thinking that any morning shove, any morning strength, etc., is going to fade off. We've got MLGO. MLGO, based on the volume, looking at the volume, this is under the continuation side, by the way. Continuation trades, I'm looking for not necessarily the long trade, but at least continuation and stay familiar until, it exhausts out. However, if MLGO were to have a week open, start to, churn, then I'd be interested in possible liquidity trap type of situation. Ape and AMC had a filing after hours, so there should be some action there. Nothing that I really have a bias on, but definitely staying on radar because it's been a fantastic trader. And most importantly, the liquidity is real, right? It's not the small cap kind of back and forth that really gets you in trouble. It's, you trade what you see. Next up, CVNA, great chart. I mean, it is near, it's a very clean breakout look. That could continue on and that could squeeze out, or it could just hit a wall and fade off. So I'm familiar with it. Doesn't mean I'm crazy bullish. I want to stay present with the name to wait for that opportunity. I think there's going to be a 50 to 80 cent type of opportunity real soon. And given the liquidity, given the action, I think it's going to be a nice trade. We've got LHDX, no position, but it had that big swipe up, consolidated, and the daily's been getting soaked up. So be aware of that. Look for a potential opportunity if that thing starts to go up. And last but not least, HOLO. You guys know I've been kind of watching this one. It did the slow squeeze out. So the first trap was in the 8 range down to the 5. And we know to stay away from trades without, it needs to trade 1 million or 2 million shares of real volume, offers, staying heavy for it to be a liquidity trade, a liquidation trade. It flushed down to 5s on relatively low volume, like less than 100,000 shares between all the halts. So we know that it's not a liquidation trade. I think that a lot of people stayed there, and it started to slowly squeeze them out. We had a buy in the day that it hit 22. And it was my thought that by the end of the week, we might have some sort of T+2 move. And so what I mean by that is all of those people that shorted after the 22 move, they feel comfortable, they're up. Next gap up, they fade off, they're feeling comfortable, they're letting it work, and then they get hit with a buy-in, and it starts to turn it into certain halts and things like that. We had a little bit of that Friday, and then it consolidated, but there's 2 days of steady consolidation. So that's either a buy-in or somebody supporting it. So it's either going to fail hard and unwind, and that's the risk, or it's going to have some sort of outlier type of opportunity. So what I've been looking for is flushes as long as it holds the recent base. If it starts to go and it ramps up and pulls back, ramps up, I'm interested in the potential that there's a lot of shorts here that are on the wrong side. And I think that they've been baiting, but I have to be proven right. Because if I am wrong, it's the type that will go to $5 and it's going to unwind. So again, I want to see this thing consolidate, hold those 9s, consolidate at 10, ramp up 12, pull back, hold, right? You can't assume that it's going to hold after it ramps up. You have to be proven. And that's it. That's what I've been prepared for. I've got a couple other staying familiar trades on there. And that's it. We'll see you guys in the room Tomorrow, hopefully this market continues to really heat up. Remember, if you're wrong, move on. If it's not doing what you think, move on. There's just so much going on right now that you don't need to stay in a trade that's not doing exactly what you thought. Let it prove you and your thesis right before assuming that it's going to do what you think. Because the assuming is what gets you in trouble. So catch you guys in the road. Have a good rest of the weekend. And as always, thanks for watching.